Hello guys, once again I welcome you back. So today we're going to be talking scalping. So before I start today's video, let me first close off these orders. Scalping step index. Add some open orders here. Let me first close them off because we are going to start talking scalping. Yes, basically that's it. And now I'm going to be explaining why. Now, what is scalping? Most times, scalping is where a trader really wants to find some quick entries, to get in and out. Basically, when you're scalping, you're not willing to stay in the trade for so long. You're not willing to stay in the trade for so long. For instance, if I can come here and then I go to properties and I turn on trade history, we can see that the orders that I've closed off were from this point here to just this point here. We are on M5, or if at all it's M1. You can see that basically, um, let me show you. They were just from this point to this point here. You get? So that's what scalping most times is. Like, you're going to be utilizing these small time frames for some quick entries. Then you get in and out. You get in and out. You make your profit and then you leave. Or sometimes, if at all you are in a loss, you don't stay in the loss for so long. You get in and out. So we are going to be looking at that now. What is the first step? Personally, what do I look at for? So we've seen that here the trader is mostly focused on utilizing some opportunities in the market. Now, let me tell you something about the market. If I can quickly come here uh, on TradingView, we know the markets are fractal. Like, the market is fractal, be it forex, be it synthetic indices, be it any market. For as long as there are candlesticks, the market is fractal. What do we mean? We know that if at all this is, let's say, a bullish trend, let's say on on the on the on the H1, you find that even on small time frames, there are some bullish and buying trends. You get? So basically, the structure, what you see, if at all I'm to draw a structure like this, let's say something like this, I cannot say that only that structure, that kind of pattern happens only on H1. No, it happens on all time frames. You get? So that's it. So what is the first step if at all we want to get in and out? Later on, I'll be talking about this indicator. Let's first leave it at that. One, for step index. Now, the first thing that I do, I first come on a big time frame. You get a big time frame. If at all I'm going to be trading, if I'm going to be scalping on the M1, you get, on the M1. For me, a big time frame starts from M15 to go up. You get? If I'm going to scalp on M1, though M15 is kind of risky, it's more of an intraday time frame. But most times it's most advisable that you start, let's say, on the H1. You get? On the H1, if at all you're going to scalp, more so on the 1 minute. But then you start on H1 and then you go upwards. You get? So you may choose these time frames. Now, you may choose to start less on the daily and then you come down. You get? Now, if I come on the daily, I can look at step index. Let me turn off the order history here. Now I can look at step index and I see what's really going on. You get? So I can see that we are still the market is still bullish on the daily. You get? Most times on the big time frames, I look out for a trading range. You get? A trading range. Now for me, my trading range, let's say on the daily, for me, on the daily for step index is this one, where up to this point here. You get? We are in. This was a higher high. You get? This is no, this is a higher low. I mean, this is a higher low, and this was a higher high. You get these points here. This is if I can show you now. I don't know whether you can understand that, but to me, on the daily, and for those that have some kind of knowledge about market structure, we believe that this is a higher high, this is a higher low. Sorry, I'm sorry for that, because this is a low point, and then this is a higher high because it's higher than this point here. Like we broke structure over here, you get? So we are not looking out for much. It's because I'm explaining, but then I want to go on small time frames and then scalp off, you get? So now, given that this is we are in a bullish market, but you know, on small time frames, there are those opportunities where the market is going to be selling, the market is going to be buying, but at least I have it at the back of my mind. Now I choose my trading range. You get? I choose my trading range. Now the market is not yet bearish. You get? That's why for those that are swinging step index up to now, I have some friend of mine, like it reached here, he was still buying, and he's not yet out. It pulled back, and for him, we believe this is a pullback, and something like some kind of W could form here, and then we proceed up, which is fine. Now, then you come, given that we've chosen the trading range, now I can look at the H4 now. When I start getting closer, I start getting more interested. You get? Now, what is the trading range for H4? Now, for H4, the surprisingly we have uh, 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 a lower, this is called a lower high. Yes, because it's this high is lower than this one. Yes, you see those words sometimes confuse me. This is a lower high, and then we have a lower low. You get? We have a lower low. Basically, we have an area of demand here. You get? Remember, on the daily, you first understand this matrix. On the daily, the market is still bullish. You get? It's still bullish because we have a higher low and a higher high. You get? Now, what are we seeing on the H4? On the H4, we have a lower high. You get? We have a lower high and we have a lower low. But now, surprisingly enough, this area of demand, you get this area of demand, the market has still failed to break this area of demand, and then we are gravitating more towards towards the supply side. You get? So what does it mean? Given that I'm on H4, I start getting more interested. You get? Now it means this one means apparently that a movement, if I am taking a sell entry, you get, that is a pullback, that is a counter trend. You get? That is a counter trend, because how are they resonating H4 and the daily? You get? Right now, H4, even H4, you get, is respecting demand, which means H4 is also bullish. You get? The daily is bullish. You get? Is bullish, much as we're seeing this. I know this is what we call complex market structure. Now, H4 is starting to resonate with the daily. Unlike here in these parts here, before we created this trading range, you get these parts here, you get, let's say from this point to this point to this trading range, you get, H4 was not agreeing with the daily. Why? Because the H4 was creating lower highs and lower lows. You get? Lower highs and lower lows. Here, the H4 is starting to create higher lows. You get? It's creating higher lows, of which even the daily time frame was creating higher lows. What is remaining is for H4 to start creating higher highs. The daily is doing it, higher highs like here, whereby it will also break and we get swing highs. You get? So, but apparently the H4 is resonating or is agreeing with the daily. You get? So now I've chosen, this is the trading range for this is the trading range for H4. You get? it's for the H4. Now here sometimes it really gets tricky. It really gets tricky when the market is not leaving the equilibrium, or when we tap into the equilibrium. Like when we divide, this is basically Fibonacci retracement. Now for me, I normally like only these levels. I like getting the equilibrium. So it really gets tricky when we are in we are around equilibrium, and then the market is not leaving that area. Sometimes it really gets tricky because most times it's a consolidation. You get, the market is consolidating, and then we know big moves come out of consolidations. Yeah, come out of consolidations, but then it can't stop us because we want to scalp off, you get. But then we've chosen our trading range. Now I can go down to the hourly, you get, to the hourly, and then in the end I want us to see how we are going to be ending how we are going to be ending on how we are going to be ending on the M1, you get, or seeing how would benefit if at all you wanted to trade it today, you get, basically today. So now, on the daily, I mark out. Now, the more I get closer, remember when we started on the daily, we had these levels, these trading ranges, and then basically they're just communicating. H4, we have this one, and then this one. For this one, it's not in the picture. I was just explaining. And now we are on H1, and then still we are marking out some of the key levels on H1. Actually, this is another key level on the H1. For me, these are levels. Mostly when you're scalping, these are levels that I be looking at, to see, like, I interpret if at all the market has broken them, I start to change my mind, and then it starts to communicate a lot to me, you get. But now this is the range for the daily. If at all we break here, of which now you get, for now, given that H4 was showing me that it is bullish, you get, because it was respecting demand more, you get, demand more, and then breaking areas of supply, so which means we were breaking structures to the upside. Now uh, we can see that on the daily, still we have this area of demand, and then we have this area of supply, you get. But then the market hasn't yet tapped into uh, supply to see its reaction, you get, to see the reaction. But now, that is the trading range for the daily anyways. Now I come on the M15. Now on M15, you can see that the trading range for the daily time frame, which is from this point to this point, we can see that it came, and on M15 we came and mitigated this area. If I can pretty much turn on the period separators, we can see that yesterday we had this area of demand created. You get, this area of demand created. Now we can see that today we've come and mitigated it. You get, today the market started by mitigating, and then it started to push to the upside. You get, of which we saw it on the H4 and the daily, that we are moving up. You get. Now our target, our target, our target, if at all now scalping starts to come in, you get, it starts to come in. Now, on M15, if at all you were on the charts by this time, you would get in here. You get, you would get in here, and then you buy. You get, but now for me, in my country, by this time here, I'm awake. You get, by this time here, I'm normally awake. By this time here, where I've turned on that point here. Now, here was another opportunity because on M15 we created another area. You get, we created another area of demand. Now you can see that when we are moving up, when we are pushing to the upside, or let's say to the upside, you can see that the market will be creating those demand zones. It respects them and then pushes up. Now the funny thing, sometimes it creates them and then it doesn't respect them. Now, now we've seen that. Now, um, what I wanted to bring out, I want to end on the point of one of the points that I want to bring out is where I took the entry. Now, most times, now I really know that taking an entry down, and it's really important. You get, because I told you one time that we really need to understand, if at all the market is moving up, let me demonstrate something here pretty quick. If at all, we have to understand if at all that the market is either bullish or bearish. Now you're going to find that in a bullish market, you're going to know that these runs, these are the impulse moves, you get, and then these ones are the retracement, you get. So that's why I started on a big time frame, you get, for us to understand, that a move, if at all you're taking a move that is coming down, that is a retracement, and you should be careful. You get it. It is a retracement. We most like the moves. Let's say if at all the market now shifts in one of these zones, if I get a shift in market structure in one of these zones here, and then which means here I'll be targeting bigger. You get. But as a scalper, if I choose to scalp off, one of the things that I can look at, is here. You get. Now, I told you one time that there are entries that we look at the high and the low of the day. You get. You can basically look at the high and the low of, let's say, the previous day. Let's say here, uh, we can see that yesterday that was yesterday's high, and then this point here was yesterday's low. You get. Now, surprisingly, in most cases the market is going to be interested in chasing one of those. You get. The market will either be gravitating towards, going towards the high of the previous day, or gravitating towards the low of the previous day. You get. And then here you can see that the market went for the high of the previous day. You get. And by the here for this one, it has a very very high chance of, we have a very very high chance of winning with this. You get. Of winning with this, just by targeting either the high and the low of the day. So if at all I got in here, if I was scalping, I could just literally take it to the high of the day. You get. That's it. But it's on that it will always provide you with opportunities every day. You get. Now, uh why the high and the low of the day? Now, basically, the high and the low, they create what we call points of resistance, people, points of support and resistance. You get. And now, what does the market really want? Is that they can come and then they create a level of resistance. Let's say there. You get. Now, they will come and then they will buy up to this point. You get. What are they interested in? People are seeing this area as a strong area of, let's say, let me first delete this. They will look at this area, let's say for that point, as an area of resistance. You get. What will the market do? They will come again. You get. Now, because they know people are selling here, they will come and push up, and then they sell. What have they done? People who were selling here, in most times here, they've come, either you're blown out or they've hit your stop loss, and then they sell. So that's why sometimes the market goes actually in the direction where you predicted it will go after you losing. You get. And now, yeah, I explained that in details when we are with students. You get. When we are with students. Now, so that's it. Now today, you get, I took the entry. Now as you can see, let me come here. Let me first see it on M5 here. Now this was the entry from this point to this point, because I showed you when we were starting. Literally, this was the end, the area. Later on, the market has proceeded down. Now we can see that what I've just explained is something that really happened here. You get. We created a level of they created a level of resistance. You get. A level of resistance. And now sometimes when I see a shift in structure at that level, I can look out for some quick opportunities to scalp. You get. To scalp. And now you get in, and then you get out. For a scalper, even if I thought this was my target and I come and I hit it, you get. And then let's say the market proceeds down, I don't feel bad, because you just take what is given. You get. You just take what is given and what you had predicted, and then later on you can reanalyze your zones, and then you look for more entries. Now I'm going to show you one more last trick for scalping. Now when you're scalping, given that I've given the background of, let's say, step index of my predictions of where it's going and what's going on, we can utilize the 50 period exponential moving average. And what is it going to be helping? The 50 period exponential moving average, most times when we are using it on the M15 or the H1, You get? So it's going to be showing us the intraday volatility. You get where volatility is gravitating towards. Now, when prices are, let me start off here because it really provided itself as a good example. Most times, most times there are those times when you're going to see it when prices are just crossing it. You get? When prices are, it's almost in the middle. You get? When it's almost in the middle, what you should know is that the market is planning for a big shift or a reversal, some kind of a reversal or a complex pullback. By a complex pullback, I mean is that if at all, let's say the market is moving, the market is moving up like that, you get, and then it's making those kind of things. A complex pullback is that one where the market will pull back like this, like this, like this, and then it proceeds up. We can see that the market is still bullish. You get? This is a single, this is the same lag. You get? Here pulling back wasn't this wasn't a reversal, but this was rather a complex pullback, this point here. You get? But the market is still bullish. You get? And actually it's what is really happening on step index. We've not, on the big time frames, we are not yet as bearish much as we have a big part bearish on the daily. Like for instance, the daily, you get. So we have to understand that there are those moments when we get a complex pullback, and then after this complex pullback, normally the market pushes back uh up, you get, and then it surpasses here. It will continue, and then it may not proceed all that much, but normally eventually normally it turns, you get, after taking out a lot of people, you get. So so that's it. Now, but then when it stops to cross, and then we can see that properly, we can see that the market pull back. Now, if at all the prices are below, you get, we start looking for bearish entries. You get, so you can scalp off some bearish entries. And now we can see that later on we got a shift where we got a shift, it retraced and then retested. I told you when we have a moving average, we cross it, normally the market retests. Now, retesting doesn't mean that it's going to be perfect. No, it may come a little bit, but then if at all it didn't retest to continue down, but rather we can see that it moved up, crossed, retested, you get, and then moved back up again, then here would look for buying entries, you get. We can see that apparently it's crossing. Is it crossing to retest? If at all we cross and then retest, then we shall be aiming to take out this low, you get. And now actually when we really go down, I believe even on a big time frame like the daily, you will see that step index really has turned officially bearish. You get, it has turned officially bearish because this is a very very significant. It's one. I know this is one of the most significant points. Uh, you get, it's one of the most significant. If at all we really break here, I will confirm that step index is really now bearish, you get, but we are gravitating more so here. We could get something like this, you get, something like this, and then we push back up, you get. So those are just predictions. We have to loosen up and then be free with what the market really gives, you get, with what the market really gives. So that's it. Now I've told you how we can utilize the 50 period exponential moving average. These points where the market was bullish, you can see that when we cross, when you're on M15 or the daily, when we cross up, and then we shall be seeing that those pullbacks. So we will be looking at how the market is reacting when it's pulling back towards the 50 period exponential. When it's pulling back and then officially crosses, we don't need to worry. If it crosses and then retraces and then it starts to move down, then we can start looking for bearish opportunities, you get. But when it crosses up, for instance, the same things that you're seeing, we created an area of actually an area of demand below the 50 period exponential. We moved up, then we'll be looking at this area of demand as the market returns. So when it returns, we're on M15, we can look for entries to move back up, you get. So I think let me end this. Let me end this episode here. I'll see what I can talk about next. For now, I wish you the best in trading. I believe I've tried to explain. And I wish you guys to be profitable. Have peace.